We are joined by the one and only Oliver Sloup. He's with Blue Line Futures. He's based in Chicago. Well, I tell you what, these markets are just totally asleep here to start out the trading week. How come?
You know, I'll take a quiet market considering some of the moves that we're seeing in some of the outside macro markets, and a lot of that is in the currencies. We saw the British pound fall out of bed last night, actually hit a circuit breaker where trading was halted for a couple minutes, and the dollar obviously screaming higher on the back of that, making new 20-year highs, which seems to be like something we're saying almost every single day. But the dollar is well off the highs, and potentially, if we close lower on the day, you might start to see a little bit of a blow off top, which could be supportive to some of these commodities, despite a time of year where we tend to see seasonal weakness with harvest picking up.
It's amazing that the December futures on the U.S. dollar index are 1,100 points off of their earlier high last night and still up about 360 points. That's amazing how high they had gotten overnight and then, just as you mentioned, kind of flamed out here. How detrimental is it really when it comes to the bigger picture of overseas ag sales when you have the dollar at these historic highs like that?
Well, it's going to be something to keep a close eye on. And over the past couple of weeks, it seems like some of these grain markets are shrugging off some of the strength that we've seen in the U.S. dollar. But undoubtedly, it's going to have some sort of impact on markets, not just in the grain side of things, but other commodities as well, energies, etc. So it's going to be something to keep a very close eye on. I wouldn't be surprised to see the dollar kind of flame out, as you had mentioned. If today's price action closes lower, that would be a technical reversal, and I think could put additional pressure on the dollar, which again would be supportive to prices and agricultural prices if that happens.
When you look at the corn trade here, let's bring up that corn board here if we could. You have the December at 675, and you go to March at 679, but you have May also at 679, July at 673. Does that spread tell you anything?
Yeah, it does. We're watching the spreads pretty closely. All in all, I think some of these grain markets just start to trade in a range, which is what we've seen over the past couple of weeks. That December corn contract, we got towards the low end of the range last week. In today's session, that was 665, 668. That also represents the 100-day moving average. So I think this bottom end can hold here to start the week. But if we get back up in the mid-680s, I think you start to see a little bit more selling pickup from producers. And we continue to be in a range until maybe we get a little bit more clarity from what these yields are producing in harvest. Because as we know, the estimates on the yields has been rather wide. Once we get closer to 50% through harvest, I think the market will get a little bit better indication which way it wants to go. Keep in mind, we got a big report on Friday as well, quarterly stocks, which will have a big impact on prices.
I'm glad you brought that up. Yeah.